Good morning. This is Larry Ripka of the Valmark Financial Group. I'd like to comment this morning on the important development involving AIG and its announcement to spin off its life insurance and annuity businesses. This was reported this morning in the Wall Street Journal by Leslie Scism. We do not yet know what form this divestiture will take. It could be a spin-off similar to the Met, Bright House, GE, Genworth spin-off, or it might be a sale to a third party. Many of you will note that AIG was hammered in the last financial crisis and was bailed out by the federal government. Those loans have since been repaid, but the AIG life insurance business has never really fully recovered. Activist shareholders, starting about 5 years ago, were trying to pull off this very thing that was announced today. Now, for financial advisors who are talking to their clients about life insurance and annuity policies, this is big news and part of a much larger trend. I wrote an article several years ago entitled "The Elephant in the Room," which really detailed how low bond yields impact life insurance companies and the products that they create. What I could not have predicted 5 years ago when I wrote that article was the further fall in bond yields that resulted this year as the Federal Reserve started to buy bonds to stabilize the markets in March. We've seen from the charts that you can see on the screen a further 50% reduction in bond yields in the last 12 months. And as you look at various bonds the insurance companies might buy, they're really stretched just to meet basic guarantees on some products. So what were some of the things that I talked about in the elephant in the room that advisors should be aware of? First, these low bond yields result in higher prices on general account products, notably products like universal life with secondary guarantee and term insurance. Second, it puts pressure on all existing life insurance products, whether they be fixed annuity, universal life, index universal life, all general account products, whether it's stock or mutual companies, are going to be under pressure. We expect to see the largest decline in stated dividends for the mutual companies this fall as they announce dividend scales for 2021. Third, this very trend of the AIG spinoff of its life insurance business. It's a tough time for life insurance companies, and whether it's Met and Bright House or Resolution buying Voya or now AIG, this is yet another symptom. The stronger companies are raising capital. In the presentation that I did last week, we talked about how the strongest companies are raising additional capital to post reserves for this decline in interest rates and write-downs in bonds and commercial mortgages. Finally, we've seen this trend of some companies trying to push this risk of lower interest rates completely onto consumers, notably with index universal life contracts. I've talked before about how trading a 3% guarantee in traditional products for a guarantee of 0 just doesn't make sense. At Valmark, we've been working with our firms to stay in front of this, and it's really part of our whole 10X strategy. And as we think about the big change that needs to continue to occur, it's a move to separate accounts. Companies just cannot produce the type of yields that create compelling products in a general account format. So at Valmark, we've seen continued shift to variable, with our life insurance sales up 65% year to date through the end of October as compared to 2019. All of this growth has come on the variable side. especially with larger policies. We also have significant inventory going into the fourth quarter. Again, mostly variable products. These are the products that we think really align the long-term interests of insurance companies, clients, and advisors. If you'd like to learn more about any of the things that I've talked about this morning, including getting a copy of that article from 5 years ago, The Elephant in the Room, we'd be glad to send it to you. Thanks for listening this morning. At Valmark Financial, we bring the golden rule to life. Thank you.